Hello, and what's up to this quick tutorial about bullish divergences. And I really want to make this quick just because of I kind of want to create this format where I'm just really briefly talking about a trading technique or some kind of oscillator or anything related to trading basically, but in a brief way. So there is a lot of information about divergences in general. Use Google, you will find out everything you need. But we're going to focus on the bullish ones and just go over this Ethereum chart right here and see if we can spot some, so you can kind of understand what you need to look for in order to just feel more comfortable and maybe start using them yourself. Alright, what are bullish divergences? As I said, there's a lot of explanation about it, but simply explained, it's a trend reversal into the bullish direction. So whenever we talk about the bullish divergence, we're gonna see, or we're most likely gonna see, a trend reversal to the upside. And they are created, or they form, whenever there is on my chart here we use RSI, but you can use other oscillators. You just need to read up on which you can actually use, but I just always have been using RSI, so for me that's the way to go. You want to see higher lows on the oscillator on RSI in this example, and you want to see lower lows on price action, right? So whenever we see lower lows on price action and higher lows on the RSI, this could potentially mean, and actually it means more often than not, that we're gonna see a trend reversal. And if we go around and just try to spot them, then we can actually already find one here, right? We can see one on this 4-hour chart. We can see here that we are creating, or we have created a lower high, and we have created a lower low on price. And I want to emphasize here, and I know not every trader is agreeing with me here, and to be honest, I still have a hard time to understand why people use wicks and not bodies, because the true definition of a divergence is actually to use openings or closings of a candle body. So I don't know, maybe someone can explain it to me why using wicks could be a possibility, but what I have learned is that you should use the bodies and not the wicks. And actually, to spot divergences even easier, you could just switch to line, like just switch your chart from candles to line, and then it's actually way easier to spot divergences. And whenever I do that, then it shows me the bodies and not the wicks. So yeah, that's why I'm always a bit confused why people use wicks and not bodies. But you know, if they make money like this, then that's totally fine. So this is one, right? We have one right here. And what happened? What a move up. Nice. It wasn't an extreme move up. I mean, obviously there's still good money to be made here, but it kind of flattened and fell down again, but it never came back to that low. So yeah, it was pretty much a very nice bullish divergence, and from here on it just kept trending upwards, right? So that being said, trend reversal confirmed in this case. Do we have more on this chart? Well, let's see. we want to see, what do we want? What do we want to see? We want to see a higher low, right? So, where could we see one? And they could sometimes be actually quite hidden, so you need to look carefully. But if you sometimes really, look closely enough, then you find them, and that gives you an edge. I see one here, right? I see a higher low, once again on RSI. And do we have a lower? Do we have a lower low here? Yes. Yes, we do. We do have a lower low on the bodies. Now here again, trend reversal confirmed, and yeah, the rest is history, right? Now, that's why I always get confused. If you would use the wicks here, you wouldn't have a divergence, right? But if you switch to lines now, like before, then we have one. So this just tells me that you should use bodies instead of wicks. And I had quite a few arguments or quite a few discussions online actually about that topic, and people were so convinced about it that using wicks is the right way to go. But to me, frankly, they are way less accurate than when you just use bodies. So I don't see a point to use wicks when there is more opportunities for you when you use bodies. But anyway, let's just switch back to candles. Once again, it's confirmed, right? It's a nice move up from here, and there is a lot of money to be made. Only by spotting this, you basically really just need to wait until you see something like this, wait for the candle close, and you have a nice buy. And you could actually really just wait for this one candle here to close, get in, set your stop loss below the last wick, in this case, and then you have a nice trade. Obviously, if you trade leverage, and if you have you have your own risk management. This is just an example. I mean, I don't say wait for the close and then buy, and it's not something you should just only solely rely on that close. You need to add maybe some other kind of things which you use for your own for your own trading, right? I mean, I don't know how you trade in general, but I know that if you have an edge and you want to use divergences in your trading or for your trading, then yeah, try them out. They actually are very, very profitable, and they really shouldn't be ignored, and could be just, there's a lot of support and resistance traders, and I think that's the most common way to go, and it's also one of the most a very, I would say, a safe way to get into trading if you know how to trade resistance flips and supports and all that. So definitely the 101 when it comes to trading. But I must say that trading divergences only is doing me quite well. So yeah, this is not a divergence, which just confirmed that it worked. So now let's find one which didn't work. Maybe there isn't one, but let's just see if we can find a divergence which hasn't played out. So I think this is the one we just had. Do we have another one? Do we see another divergence which couldn't possibly, or which didn't play out? Well, we have one here. This is another lower, higher low here, right? And price as well. Once again, it's a bullish divergence. Move up. We fell back down, but in general, we had a bullish divergence here, which could have made you money. So on the 4 hour, I must say it's quite hard to find a higher low on the RSI and not a lower low on price and they don't work out. Honestly, I actually never see them not playing out, which is kind of confirming that this is a very, very, I don't know, yeah, just a way to trade which can make you quite good money actually. You can use them on all kind of time frames. I mean, let's just go to the scalping paradise, 15 minutes, or even lower, but let's just stick to 15 minutes. I guess that's quite okay. And what do we see here? We want to see a lower low on price. We got that right here. Boom. And we have a higher low here on the RSI. Trend, reversal, confirmed, played out just perfectly. And you can see, I mean, really, you basically only need price action and this oscillator to make that judgment. You don't need volume. Like, you could actually just go and be like, okay, let's add volume for another confirmation. Because usually when there is a reversal candle coming, then the volume spikes, right? So we can see here, this was the last candle before we reversed, and the volume kind of spiked on this chart, on this example. If we go back to maybe another one and check if we find one more, we see here we got this bullish divergence again, lower low on price, higher low on RSI, bullish divergence played out. We got the higher prices after that, and again we do have this candle here, this volume, which had a volume spike, and also gives you more confidence that this could be a reversal, right? That's pretty much it. I mean, this is very basic, and there's obviously always a lot more information to whatever you're doing in trading, but just to give you an idea about how I'm looking at bullish divergences, there's really nothing to overcomplicate. It's a really basic kind of way to observe things on the chart, and as you see, you don't need a lot. I mean, right now we have RSI, we have price action, and we have now volume added, which we don't even really need once we actually have a candle close which confirms that we could see a reversal if, you know, be it a doji, be it I don't know, a bullish hammer or whatnot. They could all tell us that we are seeing a reversal anyway. You know, bullish engulfing candle, which could be something like this. This is a bullish engulfing here when the bullish candle after a bearish one is bigger. Then you have an engulfing candle. Same goes for the other side when there's a bearish candle. You know, when the bearish candle is bigger than the previous bullish, then you have a bearish engulfing candle. But that's for a different video. I hope this helps, and it's not too much rambling, just to give you a brief idea, and just try them out. Just go open a chart, try to find them before you trade them. Just really try to find them and spot them and become confident, and then you can actually see that it's not too complicated. It sounds really like when you get into trading and you hear like bullish divergence and bearish divergence and bullish hidden divergence and all those names, then you kind of start to be like, oh shit, this is really going to be complicated stuff. But actually it isn't. It's not, right? It's kind of really just I think trading is mostly just to not overcomplicate things. And once you understand that, then it's really just reading a chart and see patterns and see something which you already saw in the past with historical data, and things start to become second nature. Cool. Thanks for watching. And if you want to see more videos like this, then just drop me a comment down below. That would mean a lot. Just give me some feedback. You know the drill. Like and subscribe and everything the algorithm wants to see, so we can reach those 1,000 subscribers in order to go live at some point. That would be really, really nice. Cool. Catch you later. Bye bye.